Hey folks, ever wondered how companies began selling shares in cafes to fund 17th century maritime adventures? Or how investing today can turn you into a co-author of financial history? This video is for you. Join us as we explore the thrilling universe of the stock market, unravel the behind the scenes of daily fluctuations, and discover how, in the information age, anyone can become an investor. Stay tuned till the end because we'll unveil the secrets of how to understand the stock market for beginners. And of course, if you haven't subscribed yet, hit the button below to stay updated on all the latest insights. Let's dive in! 5. The stock market originated from the practices of the 17th century Veronite Ostindian Company, seeking private investment for costly maritime journeys in exchange for profit sharing. You know, the stock market is one of those fascinating things with an incredible history. In the 17th century, the Veronite Ostindian Company was in the game, operating hundreds of ships to trade gold, porcelain, spices, and silk worldwide. So how do you finance something so grand? Their move was genius. They sought people with money to invest and, in return, offered a share of the profits. That's how they managed to fund these expensive maritime journeys. Unintentionally, they gave life to the world's first stock exchange, selling shares in cafes and ports across the continent. Imagine nowadays the system has evolved, but the essence remains. If a new company like a coffee one wants to enter the market, they first knock on the doors of big investors. If they believe in the idea, they kickstart it by supporting the initial public offering, IPO. It's like the company's official entry into the trading market. From there, anyone or any company believing in this promising venture can buy shares. And when these investors enter, they become partial owners of the business, helping it grow. As interest grows, more people want to buy shares, driving the price up. It's an interesting cycle that boosts the company's market value. It's a dynamic scene, you know? Various factors influence the market daily, from material costs to technological changes, management alterations, media news, and even laws and trade policies. All of this affects investor confidence and, consequently, the ebb and flow of the stock market. If a company is doing well, more people want to invest. But if things aren't favorable, investors may sell their shares before the value drops even further. It's a complex game, but one that moves a lot of money. And look, the stock market isn't just for the wealthy sharks. With the internet era, even us regular folks can join the dance. Just get informed about how this complex system works, buy some shares, and, who knows, help a company we believe in to grow. Sounds cool, right? The first step is understanding how things work, and believe me, it can be much more accessible than it seems. Let's go. 4. Inadvertently, the Veronite Ostindian Company created the world's first stock exchange by selling shares in cafes and ports across the continent. Oh, I need to share a fascinating tidbit about the history of the stock market. In the 17th century, the Veronite Ostindian Company, the company operating ships to trade gold, porcelain, and the like, inadvertently kick-started the world's first stock exchange. How? They were seeking funds to finance these incredibly expensive journeys, so they had a genius idea. Guess what they did? They sold shares, yes, pieces of the company's pie, in cafes and ports throughout the continent. Imagine, they basically invented a fundraising method that evolved to this day. These shares were like invitations for people to participate in the profits of this commercial adventure. And it took off! Without even realizing it, they brought this complex system to life. Today, when I think about this story, I see how something that started unpretentious turned into the pulsating heart of the financial world. I find it incredible how the initiative of a company centuries ago shaped how we deal with investments today. And look, this is just a glimpse into the saga of the stock market. I wonder what else is behind this curtain of financial intrigues. How about exploring more of this universe together? 3. In the modern stock market, companies attract funding by presenting their ideas to large investors who can support their initial public offering, IPO, leading the company to enter the official trading market. You know, in today's stock market scene, companies kind of present themselves as stars to investors. Imagine a new company like one starting in the coffee business. Its first step is knocking on the doors of big investors, presenting the idea, and hoping they buy into it. Then, if these investors agree, they give the initial push, helping with the initial public offering, or IPO for short. It's like the triumphant entry into the official trading market. I'm impressed with this process because the company basically showcases itself to the world, reveals its ambitious plans, and if people believe in the idea, they buy shares. And you know what happens when you buy one of these shares? You become, in a way, an owner of a part of that business. It's like investors saying, hey, we believe in the potential of this company, and now we want to be part of its journey. From that moment on, the company starts trading on the market. Each purchase and sale of a share is like a new chapter in this story, directly influencing the company's value. It's kind of crazy to think that, with a simple stock purchase, you're helping a company take its first steps or grow even more. But that's what makes the stock market so vibrant and dynamic. And the coolest part is that, with the internet, we mere mortals can also get into this game. Just understand how things work, choose the companies we believe in, and who knows, give a little push behind the scenes. If you think about it, it's like we're participating in a grand financial spectacle. Ready to explore more of this fascinating universe together? 2. Investors buying shares become partial owners of the business, contributing to its growth. Increased demand for shares raises their prices, attracting more buyers and driving up the overall market value of the company. You know, when you put money into stocks, you kind of become part of the company's story. It's like saying, hey, I believe in this business and I want a slice of this pie. Cool, right? You not only invest money, but also become a partial owner of the business. That's powerful because, believe it or not, your decisions can influence the company's direction. If more people think like you and want to buy those shares, the demand increases. Now imagine what happens when demand goes up. The share prices follow this upward movement. It's like the law of supply and demand acting in the financial world. With prices rising, people see that and think, wow, this company must be doing something right. Then, more people want to buy the shares, and the cycle repeats. This domino effect makes the overall market value of the company skyrocket, and that's when things get exciting. It's like watching a movie, but with numbers and financial decisions. If you're there at the beginning when the shares are more accessible and the company takes off, you might end up with a nice return. Of course, it has its risks, but that's what makes the stock market so intriguing. You're in this game of ups and downs, watching the value of your stake grow along with the success of the company. It's a bit like being a co-author of the plot of this financial story. So what do you think of exploring more of this fascinating world? 1. Factors like material costs, changes in production technology, management changes, advertising, laws, and trade policies influence daily fluctuations in the stock market, impacting investor confidence and contributing to the dynamics of the market. Man, the world of the stock market is a constant roller coaster and so many things affect it. You know, these crazy factors like material costs, production technology, management changes, advertising, laws, and trade policies. They're like the conductors of the show, directing the daily fluctuations of the market. It's a symphony of influences that make the numbers dance, and investors keep an eye on everything. Think about it. If the cost of material goes up, the company has to deal with it, right? And then, this change reflects in its stocks on the exchange. Oh, and the twists and turns in technology are also incredible. If a company unleashes a powerful innovation, it can be like a tsunami in the stocks. And when there's a change in management, it's like a cast change in the middle of a movie. Investors wonder, is this change for the better or worse? And look, we can't forget about advertising, laws, and trade policies. Negative news can shake investor confidence, while changes in laws can shake up the entire game. All of this creates a cauldron of emotions in the market. It's a universe of uncertainties, but also opportunities. And this unpredictability, my friend, is what makes the stock market so exciting. How about we explore more of this terrain full of twists and turns? So folks, we've reached the end of this journey through the fascinating world of the stock market. I hope you enjoyed exploring the history from the Veronicht Ostindian Company to today, where each of us can be part of this financial narrative. If you liked this adventure, don't forget to leave your like, subscribe to the channel to stay updated on all content, and of course, share your thoughts in the comments. I want to know, which part of this intriguing universe surprised you the most? Share with us! And of course, if you want more content like this, you know what to do. Activate the bell to stay informed about all the latest. Thanks for joining us, folks, and see you in the next video.